Hey, in today's video, we're going to be talking about the 5 business bank accounts that you need for your LLC. So, whether you just got set up yesterday or you've been at it for a few years and you feel like you don't have a good grasp of your finances and feel like you don't have that control of your business, that's what this video is about. No, we're not talking about like comparing different banking accounts. Honestly, like different bank accounts, they're all pretty similar if you take a look at them, right? Like this one may offer this kind of like $200 reward after so many months, or you spend this much money, or this one has fees. But when you break them down, they're pretty close. Where I think they differentiate is the type of banks that can grow with your business or not. So larger national banks can tend to grow with your business as far as the services that they offer, where if you go smaller and it's like your local credit union, they're not going to have as many products and services to grow with you. So that's just my personal opinion, but that's why I prefer national banks. So in this video, the purpose of it is I want you to feel in control of your business. And the way you do that is by making smart decisions today. So by the end of this video, and what I want you to do is actually go into the comments, see what people are saying about this video, because when I make content, I want it to be helpful for you and I want it to be as impactful for you and the best use of your time. So the first thing that we're going to be talking about, the first business bank account is an operating account. All right. So this is a business checking account and you want to set this up as soon as possible. When you do get set up with a business checking account, the one thing you'll probably need is your EIN. That is your employer identification number. It's like a social security number that the IRS gives for your business so that they can identify it. That bank is going to want to know what that EIN is. So make sure that's taken care of. So some people, they get set up with a personal account and they run, the business through that for a little bit and then they transition. It does open you up for extra liability because you're commingling funds, which if you watch some of my other content, you know what that is. But basically, you could end up being sued and have extra liability, or the IRS may look at your business and say, hey, their books are a mess. If we're auditing this person, we got to keep digging. But the more common thing than that is it makes it really hard when it comes to doing your taxes. And that's because at the end of the year, you now have a couple different accounts that you're looking at to figure out where the money came in, where it went out. And I always use the example of a coffee shop. So let's say at the beginning, you're running it out of your personal bank account and you're buying things like a coffee machine and, tables and chairs. And then you forget about those expenses when it comes to tax time. And then you don't get the deduction on those expenses. Or you're trying to figure out where the money was coming in and out. When did it transition over? I've been there. It's a mess. So don't do it. All right. So in that operating account, that is where all your money's coming in and out, right? So this is also where you're going to keep your books from. Bookkeeping, not my favorite thing to do. There's a couple different schools of thoughts on this. Some people think it's really important for you to learn how to do your own books and do them yourself. I am not one of those people. I believe in outsourcing to the professionals that know what they're doing. And it's also a matter of my own energy. I do not get a lot of energy from doing books, taxes, accounting, and all that stuff. That is why I pay people to do that. It also comes down to though, like where your cash flow is at. You may have to go on and like learn QuickBooks online or something like that and figure out your bookkeeping. But what you really want to be able to do with that is figure out what your P&L is at the end of the month. That is a profit and loss statement. It's exactly like it sounds. How much profit did you make? What was your loss? But then what you can do is start to figure out where the money is going each month. And this is going to be imperative for the other 4 accounts that we're going to set up. A lot of businesses that get set up and fail, one of the common things that they don't know about their business is the numbers. They're spending money without understanding how much money they can spend. They don't have a history of P&Ls that they're looking at when they're making decisions about future expenses. So you want to be an educated business owner that understands the numbers of your business. Plus, when you're starting out, it's probably going to be less complicated because you don't have, a huge business with tons of employees and cash coming in and out like crazy. It's usually a little bit easier when you're starting out. With your business, the goal of this video really is could be best explained by a visual here. So let's say you have an x-axis and a y-axis. On the x-axis here, you have cash flow. So, closer to the left, very little cash flow. Further to the right, lots of cash flow. On the y-axis, you have the amount of hats you're wearing as a business owner. Towards the bottom, 1 hat, you're a business owner. Towards the top, many hats because you're doing a lot of different things. So then you'll see these 2 lines appear on the graph. And this is, I believe, called an inverse relationship. All right. So most businesses, when you get started, unless you have a ton of funding or something, maybe you're, born with a silver spoon or whatever. But most of us are going to start in the upper left-hand corner. And that's where you have low cash flow and you're wearing a lot of hats. It's a difficult place to be, but it's also good because you get to learn different aspects of the business. But your goal as a business owner is to get out of that area as quickly as possible and get into the lower right-hand corner. That's where you're wearing one hat, the business owner hat, and you have lots of cash flow. So you really can't do that day one. If everybody could do it day one, everybody would be a business owner because they're like, this is sweet. Like, why would I ever be an employee ever again? But what you can do is do what we're discussing in this video, and that's setting things up correctly. That's because when you take the time to set up your business bank accounts correctly, at the end of the year, all of a sudden tax time is that much quicker. So you have more time to work on the business instead of in the business. When I say on the business, let's say again, going to that coffee shop example, this is somebody who is thinking about like, hey, right now we're just serving coffees and scones. Maybe in a few more months when we get established, I want to start serving some like breakfast stuff, maybe some waffles and breakfast sandwiches. I also think that we should start getting into sort of macchiatos and espressos, but we need those machines. And you're thinking about these higher level decisions and then thinking about the vision and also knowing your numbers so that you know when those things can happen for your business. All right. So that's working on the business. Working in the business is serving the coffee. It's doing, spending way too much time on your accounting and bookkeeping. It's getting just bogged down by all the details of your business. We want you wearing one hat, and that's the business owner hat. So another thing that's going to help you with that is to be calm as a business owner. So it's very difficult, especially for me, very anxious business owner. Like at the beginning, I was just like, like bubbling all the time, like overflowing because I was just like, there's so much. It's because I wasn't taking the time to explain the things that we're doing today. So the second business bank account that I want you to get is actually a savings account. And this is going to be your emergency fund. All right. You've probably heard about these a lot in your personal finances. The typical rule of thumb in your personal finances is about 3 to 6 months of emergency fund. And what that means is if as your household, we need $5,000 a month to survive, I need to have at least $15,000 to $30,000 in an emergency fund. So when it hits the fan, I can access those funds. Same thing in your business, except my recommendation is to make that number larger, especially if you have staff that you're responsible for, you're paying their payrolls. There is a little bit more responsibility, in my opinion, sometimes as a business owner than there is even running your own family, because it's easy to just tell your family, hey, we're cutting back, but it's a little bit harder to fire people in your business, okay? So what I recommend is 6 to 12 months of business expenses. So not your gross income. Let's say typically you're making $10,000 a month of gross income, but $6,000 of that is expenses, $4,000 is profit. Well, at $6,000, let me see if my math is correct off the top of my head. You're looking at 6 to 12 months, anywhere from $36,000 to $72,000 that's going to end up in that emergency fund for your business. What this is going to do for you is it's going to help you relax as a business owner because you know that you can tap into those funds whenever you need it. But you don't tap into those funds because you're like, I want to buy a new coffee machine. No, you tap into those funds because the only coffee machine you have broke and you don't have the money to pay for a new one, okay? So that's when you go into the emergency, like catastrophic type things that are going to severely impact your business, and you got to go into those funds. But once you can start operating as a business owner who is a little bit more calm and you're just more like I've heard the analogy like a duck on water, right? When you see them gliding on that water, they look so calm, but underneath, everything's churning. That's what you want to be as a business owner. You want to have a clear head, look calm, and not make these really like hijacked decisions. What I mean by hijacked is like we have this reptilian brain back here, right? Your amygdala. That's where you don't want to be operating from. And that can happen once you don't have any funds and it feels like the sky is falling. You start making bad decisions. You want to operate from a position of power. And sometimes a position of power is just created by having an understanding that you have this emergency fund over here that is going to protect you and that you can dip into if you need it. So that's like the first thing that I want you to start building up. The way you could do that is just a percentage. So going back to that $10,000 a month example, we said we have $4,000 a month of net profit. Let's say you just start carving out 10%, 20% per month. So maybe $400, $800 a month, and you're putting it over there. It's fine. It's going to take you some time to get that emergency fund built up, but you're doing the good habit of paying your business first and making sure that you're taking care of yourself. And again, this is going to be a savings account. So maybe at the end of the year, you'll have like 6 pennies of interest. I don't know. I guess interest is going up, but it still sucks. All right. So the third business bank account that you're going to have is your tax account. So this is going to be a savings account as well. Worth mentioning, you are going to have 5 different accounts. Make sure you're aware of the different fees that the bank is charging you. Some will allow you to have one main account and then have free sub accounts within it. That's a great situation. Others, you may just have to get set up with different accounts. But the tax account is exactly like it sounds, right? You're going to save for your taxes. Talk to too many business owners that it gets to January, February, and they're looking back at their taxes from the last year, and that money that they owe, they've already spent it. All right. So an easy way to look at this is going again to the example. Let's say you make $4,000 of net income each month. Well, at the end of the year, you're looking at $48,000 of net income for your business. You can then go and look up what the marginal tax rate is for a business and figure out what is the percentage of taxes that I'm going to need to pay on this. So let's say it's like, for easy numbers, it's 20%. Then you're kind of looking around $10,000 roughly off the top of my head of what you're going to need for taxes. Okay. So what you could do is each month take whatever that marginal tax rate is that you think you're going to be in. If you're not familiar with marginal tax rate, look in the description below. We'll have an explanation of that. But put 22% away each month of your net profits. Okay. So that is something that you can do. That again is a number that you're going to figure out where you're like, oh, actually at year end, we end up spending a lot of money on different things going into the new year. I don't have to put as much money in there, but you want to make sure that you're saving for your taxes. And then also I should mention that it's a little confusing with the estimated quarterly taxes. So the way that that works, and this I wasn't aware of when I started the business. I'm like, this is why I wish I watched more content like this. Basically what happens is once you have to pay over $1,000 in taxes in your business, an estimated $1,000, then you have to start submitting quarterly estimated taxes. So you're going to send this to your state and to federal, and usually a CPA is going to help you figure this out. I did not want to go into it and try to figure that stuff out on my own. But the dates, as far as that's concerned, there's a lot of important dates as a business owner. So there's those 4 quarterly estimated taxes, and then there's also your annual tax bill. Then there is also when you have to submit, W-2s for your employees, W-9s if you have any contractors. There's just important dates. There's also tax extensions. It's a lot to think about. In the description of this video will be a link to a resource for you that makes it super easy. 1-page document that is updated each year and makes it super easy for you to know, okay, these are the dates that matter. And there will even be a text service that if you want to opt in for that, will send you reminders. You can get reminders via email as well. So check out that resource in the description below. Now, as far as that tax account, it's going to change throughout the years. All of a sudden you start making more income, your tax rate's going up. Maybe you got to change the percentage that you're putting into that account, but save for your business. A lot of times people think paying yourself first, that means money in your personal account. No, as a business owner, that is pay the business first, right? Make sure that you're taking care of your emergency fund and your taxes. Not the most exciting stuff, but it's really important. All right, a little bit more exciting is our 4th business bank account, and that is a marketing account. And I say it's exciting because this is where the growth starts to happen within your business. So typically, the rate for a marketing account, like a budget, is 8 to 12% of your total budget. So let's say that your total budget for operating, when we're talking about $6,000 a month, so $72,000 a year. If you split the difference on the 8 to 12%, 10% of that would be $7,200 a year that you're going to spend on marketing. So each month, what I want you to do is put away about $700. Is that right? That'd probably be a little bit much. It might be a little, whatever 7,200 divided by 12 equals. So one of the things that a lot of people fail to do early in their business is spend on marketing. And again, if we go back to that XY axis, it's because your cash flow is lower and you're just like, I can't stomach spending money on the business beyond the core necessities of this business. I'm already spending on coffee beans and employees and rent and all this stuff. I'm not going to spend money to grow this coffee shop. Well, one of the things that I see from business owners that's really frustrating is they tend to take money out of their business too early. So let's say you're like, I really want a new car, right? Like you're just dead set on this SUV, this car, whatever. It's going to be $30,000 new. And you're like, I'm going to pull this money out of the business and then buy this car. Well, what's going to happen with that is that car has taxes that you're going to pay on it. Then you're going to drive it off the lot and it's going to be worth $5,000 less in 2 days because you drove it off the lot. And it's also paid with after taxes money. So you didn't make $30,000 to pay for that car. You made $40,000 to pay for that car. Now, if you look at the opposite side of it with money in your business, let's say instead of getting that new car, you leave that $30,000 in your business. And let's say the marketing that you do works 0%. What just happened is you created a tax deduction for your business. So let's say hypothetically that you're in a higher tax bracket, just using clean numbers, you just created a tax deduction of $10,000. So really, that was about a $20,000 expense for your business. So you can see like over here, you're like, I need to take out about $40,000 to pay for this new car. Or if marketing does zero for me, it costs me $20,000 to essentially get to the same number. Hopefully you're tracking on that. Now, let's say that your marketing is starting to have a positive ROI. One of the issues and mistakes I see business owners make, and I've been in marketing for over 15 years, I've consulted with hundreds of different businesses. One of the issues that they make is that when the marketing's not working, they go, marketing doesn't work, and they stop spending that money. What you need to do is start doing tests. So if you're the coffee shop example, maybe it's something as simple as like, we're going to send out mailers to all the homes close to us with a coupon or a free coffee kind of thing. We're going to spend money on social media with targeted ads. We're going to spend money on Google Map listing ads because we want to show up when people are searching for a coffee shop near us because we think we're in more of a touristy area. And as you start to kind of plant these different seeds, what you're going to realize is that some of the stuff works and some doesn't. And you're going to start allocating your money to the things that work better. Just know that when you're spending money on marketing, that the ROI on that marketing will get better the longer you do it. And that day one, you're creating a tax deduction versus pulling that money out of your business and not spending it on marketing and buying crap that you don't need over here. Again, as a business owner, it's just like going back to this XY graph, right? Once you get past that center point, which I wish I could remember what it was called off the top of my head. I can't remember high school math. But once you start having cash flow and then you can start decreasing the amount of hats you're wearing, you're going to have an exponential increase in your business because you're going to be thinking clearly and you're going to have cash flow to be able to spend more on marketing, to expand your business, to be able to do different things. So that's really what this video is about, is trying to get to that point where you feel like you have control of your business and your business is not controlling you. Because that's where you want to be. Like, who cares about all this stupid crap over here? Like, oh, you drive a nice car, you live in a nice house, whatever it may be. What you want to do is have some peace in your life, and you want to feel like you have control and that you can grow this cool asset, which is your business and your marketing business account, your marketing business checking account, actually your marketing business savings account. Always try to use a savings account if you can, unless it's an operating account, because that's going to have a lot of money going in and out. So that marketing account in your business, that bank account, is going to help you do that because you're reinvesting in your business to grow your business. All right, and the fifth and final bank account is going to be your growth fund. All right, kind of similar to marketing, but when I think about marketing, we're talking about different things you're gonna do. You're gonna do the flyers, you're gonna do some social media, Google ads, whatever it may be. Your growth fund is bigger than that, right? This is when it comes to your big vision for your business, because there's your vision of what it looks like day one, but then there's your vision, year 1, year 3, year 5. And again, going back to the coffee shop vision here, let's say that your vision is to actually get into other stores and expand the business itself. All right, that's going to be expensive, and you're going to want to put away money into that growth fund. The way that I would recommend doing this is to take a look at your operating account, your tax account, your emergency fund, your marketing account, all the other 4 accounts, and then take a look at what's left over of that and make a decision of how much each month you want to put away into this growth fund. Because if you can think about it, let's say you build a brand with this coffee shop and it's doing great. And then you're like, you know what? About 5 miles away is a great location. I'd love to open up a second coffee shop. A bank isn't going to give you a loan for 100% of that. They're going to want to see some money down. So you're going to have to put some money down, just like you would if you were buying a house, right? You're not going to get a mortgage with 0% down unless you know some people. That growth fund is going to be something that can grow and expand with time. And also, it doesn't have to be something grandiose 5-year vision. It can just be something that's like, in 6 months, we want to start having espresso machines and we want to add that into this coffee shop. So each month we're going to save for those machines and we're going to be able to pay those machines and get those into here so we can generate more revenue. Then as you generate more revenue, you can start having more marketing dollars. Then you can put more into that growth fund, and maybe down the line, it's opening up that second store, whatever it may be for your business, but figure out how you want to allocate funds into that growth fund. So yes, is this some work to get all this set up? Yes, it is. But again, going back to the beginning of this video, talking about that XY axis, it's like too many people wear too many hats. So then what ends up happening as a business owner is you're not taking the time to set things up correctly, like I'm suggesting in this video, so that you can organize and then not be spending so much time doing your taxes at the end of the year, feeling just flooded with emotions of like, I have no idea what's happening. No, you're going to look at a clean profit and loss statement. You're going to understand the numbers of your business, and you're going to have a vision of how to grow your business. So what I want to talk about now is how are you going to pay yourself in your LLC? Because it's a little bit different than just being a sole proprietor, or especially just an employee. So what we're going to talk about in the next video that's on the screen right here is what that looks like today, day one of starting your LLC. But what does it look like when your LLC starts to make a lot of money and it starts to grow? Because it's going to change once you get down the road and that vision that you have for your business starts to become realized. All right, I'm going to catch you in that next video because we're going to grow your business and we're going to make sure that you're keeping as many of your profits as possible. All right, catch you in the next video.